Imagine facing an economic crisis where the world around you is filled with uncertainty, fear, and volatility. What if I told you that during these very moments, some of the best investment opportunities are hiding in plain sight? Warren Buffett, one of the greatest investors of all time, has proven that crises are not barriers, they are gateways to immense wealth. But how does he do it? How does he see opportunities where others see only risk? In this video, we'll reveal the strategies Buffett uses to turn market downturns into lucrative opportunities. You'll discover how his unique perspective on recessions, market cycles, and human behavior has allowed him to consistently outperform the market, even when everything seems to be falling apart. Get ready to learn how you can apply these same principles and turn adversity into wealth. Investing during economic cycles can be challenging, especially when we're facing crises that shake the markets. But it's important to understand that these cycles are a natural part of the economy. When the market is booming, greed can blind many investors, leading them to make hasty decisions. On the other hand, during a recession, collective fear can make people rush to sell, further amplifying the market downturn. The key is to realize that both market highs and lows are temporary, and a long-term approach is always the best strategy. Experienced investors, like Warren Buffett, know that the key to success isn't trying to time a crisis perfectly, but rather seizing the opportunities that arise with it. The market's resilience, over time, is reflected in economic recovery. Market downturns are often fertile ground for finding undervalued companies. In this scenario, investing in value becomes one of the smartest strategies. It's not about avoiding the crisis, but being ready for it when it comes. If you learn to see these downturns as investment opportunities instead of moments of panic, you'll start developing the kind of mindset that the great investors always have. This doesn't mean you should invest blindly without looking at what's happening around you, but it does mean understanding that markets go through cycles, and true growth happens over time. Economic crises can be scary, but they can also be the times when you learn the most about the market and human behavior in investments. The economic history of the United States is a true roller coaster of ups and downs. During the 20th century, the country faced 2 world wars, the Great Depression, and many other challenges, such as the 1918 flu pandemic and the Cold War. Despite these economic and social crises, the U.S. stock market has always recovered and achieved considerable growth over time. This proves that even in times of chaos and uncertainty, the market has an incredible ability to adapt and recover. Investors who kept their faith in the economy and in long-term investment principles reaped the rewards of this resilience. What's fascinating is that even with major crises like the 1929 collapse, the U.S. stock market always found a way to recover. Of course, it wasn't always fast or easy, but there was always a growth trajectory. This doesn't mean that investors didn't feel the downturns, but rather that by focusing on the long term, investors saw their wealth multiply when the market stabilized. This economic recovery reflects the strength of the American economy and its ability to reinvent itself after each crisis. Just as Buffett teaches, investors must understand that the market is cyclical. In other words, tough times will happen, but by adopting a long-term mindset, you'll be able to seize moments of recession as opportunities to invest in assets that, over time, will recover and grow. American economic history is a testament to this constant recovery, and those who remain firm and resilient, even in downturns, tend to be rewarded in the future. Fear in the market can spread quickly, leading to collective panics among investors. When uncertainty looms, many investors become paralyzed by fear, often making the mistake of selling off assets in a rush. Buffett highlights that when fear takes over, everyone seems to want to exit the market at the same time, causing the decline to snowball even further. This mass selling can cause even solid companies to be undervalued in the short term. The key takeaway here is to recognize that fear is often a natural reaction to market volatility, but it doesn't last forever. Buffett teaches that during these moments of widespread panic, opportunities emerge for those who are able to think clearly and with a long-term perspective. Instead of being swept up in the emotions of the market, successful investors focus on identifying valuable companies at discounted prices. These moments of fear can present some of the best investment opportunities, as the market eventually corrects itself and recovers. If you can stay calm and stick to your investment strategy, you'll be in a prime position to profit as the market recovers. Understanding that fear is cyclical and temporary can give you the mental clarity needed to take advantage of downturns. Markets are prone to bouts of volatility and panic, but history shows that the recovery always comes. Fear may be contagious, but so is resilience. By following Buffett's advice and remaining grounded, you'll not only avoid the pitfalls of panic, selling, but also seize the opportunity to invest in the market's rebound. Warren Buffett is known for his long-term investment approach, which has been key to his incredible success. He avoids jumping on market trends or short-term opportunities, instead focusing on the fundamental value of companies. By evaluating the long-term prospects of a business, Buffett invests in companies that have a strong market position, solid management, and consistent financial performance. He believes that the best time to invest is when the market is fearful, as it allows investors to purchase undervalued assets with great potential. Buffett's investment philosophy revolves around the idea that crises can be an excellent opportunity for investors with a long-term view. He encourages focusing on value investing, where you buy stocks based on the intrinsic worth of the company rather than market hype. When others are fearful and prices are depressed, it's the perfect time to invest in strong businesses at a discount. By sticking to this philosophy, Buffett has consistently outperformed the market and built one of the most successful investing careers in history. What Buffett teaches us is that being patient and sticking to a value-oriented strategy can help investors weather any storm. Even in times of market turmoil, if you have a clear understanding of the businesses you're investing in, you can stay confident that your investments will recover and grow over time. The key to Buffett's success is his ability to look beyond short-term market noise and focus on the long-term potential of his investments. Warren Buffett has always expressed unwavering confidence in the resilience of the U.S. economy. Despite the many challenges the country has faced over the years, wars, depressions, and global uncertainties, the American economic system has shown a remarkable ability to recover. Buffett argues that the U.S. is built on a foundation of strong institutions, innovation, and an entrepreneurial spirit that allow it to bounce back from even the toughest times. He emphasizes that while recessions and market downturns are inevitable, they don't last forever, and the country's economic strength will eventually bring it back to growth. Buffett's optimism about the future of the U.S. economy is rooted in historical evidence. Over the past century, America has overcome 2 world wars, the Great Depression, the Cold War, and many other challenges. Through it all, the economy has not only recovered, but flourished. This resilience gives Buffett and other long-term investors confidence that the U.S. economy will continue to thrive regardless of the challenges it faces in the coming decades. For investors, this means that periods of economic contraction can be viewed as temporary setbacks, while long-term growth remains the overarching trend. In Buffett's view, the future of the U.S. economy is tied to the ongoing evolution of its industries, technological innovations, and its capacity to adapt to global changes. While we may face new economic challenges in the future, the ability of the U.S. to overcome adversity will likely remain unchanged. For investors, this reinforces the importance of patience and a long-term perspective, as the market's resilience provides an enduring opportunity for wealth creation. Warren Buffett's personal journey in investing began at the age of 11, a time when the world was engulfed in the aftermath of the Great Depression and the U.S. was gearing up for World War II. Even at a young age, Buffett demonstrated an extraordinary interest in finance and investing. He made his first investment in City Service shares, which he later sold for a modest profit. But it was a defining moment in his career. This early start laid the foundation for his lifelong passion for investing, which has shaped him into one of the wealthiest and most successful investors of all time. Buffett's story is one of resilience, learning, and seizing opportunities even in challenging times. Throughout his career, he encountered market downturns, but rather than being discouraged by these obstacles, he learned from them. He came to see stock market fluctuations not as reasons for panic, but as chances to buy strong companies at discounted prices. Through patience and a focus on value investing, he steadily grew his wealth and built a legacy that has inspired generations of investors. What stands out in Buffett's personal journey is his commitment to continuous learning and personal growth. He has often stated that he spends a significant portion of his day reading, gaining insights into companies, the economy, and the world at large. By remaining curious and disciplined, Buffett has consistently made sound investment decisions that have paid off over decades. His story is a testament to the power of long-term thinking, resilience, and the willingness to learn from both successes and failures. Warren Buffett has long been an advocate of philanthropy, and his efforts, alongside Bill Gates, have reshaped the way billionaires approach giving. One of the most notable initiatives they've launched is the Giving Pledge, a commitment from the world's wealthiest individuals to donate at least half of their wealth to charitable causes. Buffett, who pledged to give away 99 of his fortune, sees philanthropy not just as a moral duty, but as a way to use wealth for the greater good. By encouraging others to join him in his mission, Buffett has made philanthropy a cornerstone of his legacy. Through the Giving Pledge, Buffett and Gates have inspired countless billionaires to rethink the role of wealth in their lives. The initiative isn't just about writing checks, it's about creating lasting change in areas such as global health, education, and poverty alleviation. For Buffett, it's about using his success to help those who need it most, whether through funding, educational programs, or supporting health initiatives. Philanthropy, for him, is a natural extension of the values that have guided his career: responsibility, long-term thinking, and a commitment to creating value for others. Buffett's philanthropic work demonstrates the profound impact that wealth can have on society. It's not just about donating money, it's about investing in a better future. By sharing his fortune with those in need, Buffett is fostering an environment where the next generation of leaders can thrive, where more lives can be improved, and where the world becomes a better place. His actions prove that wealth, when used responsibly, can truly change the world. Warren Buffett and other billionaires have long understood that the true power of wealth lies in how it can be used to impact the world. While building wealth is important, the ultimate goal should be to use that wealth to create positive change. Buffett has always emphasized that it's not just about financial gain, but also about leaving a lasting legacy. Through his philanthropic work, he's demonstrated that wealth can be a powerful tool to tackle some of the world's most pressing issues, such as global health, poverty, and education. Buffett's philosophy is simple: invest in the future by supporting causes that will create long-term sustainable benefits. For instance, his investments in renewable energy, medical research, and education are not just financial contributions, they're bets on a better tomorrow. He recognizes that addressing social issues through smart investments can bring about meaningful change, making a profound difference for future generations. This is why he and other philanthropists focus on causes that can make the world a more equitable place for everyone. The true value of investing in transformative causes is not just measured in dollars and cents. It's seen in the lives improved, the opportunities created, and the communities lifted out of poverty. Buffett's commitment to changing the world through his wealth is a powerful reminder that real success is not just about accumulating riches, but about how those riches can be used to make a difference. As we continue to face challenges like climate change and inequality, Buffett's approach offers a blueprint for how the wealthiest individuals can and should use their resources for good. Philanthropy for Warren Buffett isn't just a strategic business move, it's a deeply personal commitment. He often shares the emotional journey that led him to prioritize giving over accumulating wealth. For Buffett, the decision to pledge nearly his entire fortune to charitable causes was influenced by his own experiences, as well as by the lessons he learned from others. It wasn't just about his wealth. He wanted to ensure that his legacy would be tied to making the world a better place, especially in areas such as health, education, and poverty alleviation. What's truly remarkable about Buffett's approach to philanthropy is that it's not driven by an external agenda. His personal experiences, such as his childhood, the impact of his family's values, and his observations of the world shaped his desire to give back. He is adamant that the wealth he's accumulated should go to causes that can change lives. This personal dedication to philanthropy is part of what sets him apart from many other wealthy individuals who might prioritize wealth accumulation over giving. Through his personal commitment to philanthropy, Buffett has demonstrated that giving is not just about writing checks, it's about creating sustainable change. He believes that his wealth is only valuable if it can benefit others in a meaningful way. His willingness to donate billions not only impacts society, but sets an example for others in positions of power and wealth. This is a powerful reminder that, beyond financial success, personal commitment to social responsibility is what truly defines a legacy. Warren Buffett's journey in the world of investing is a testament to perseverance and the power of continuous learning. Throughout his career, Buffett has faced numerous challenges and market downturns, yet he remains one of the most successful investors in history. What sets him apart isn't just his ability to make profitable investments, but his unwavering commitment to learning from every experience, whether good or bad. Buffett is a firm believer that every setback offers valuable lessons that can guide future decisions. One of the most powerful lessons Buffett shares is the importance of patience. It's not enough to simply make investments, you must be willing to hold on to them through thick and thin. While many investors panic during a market dip, Buffett remains calm, reminding himself that he invested in solid businesses for the long term. This mindset has allowed him to weather financial storms and emerge stronger, proving that true wealth is built over time, not overnight. What's also key in Buffett's approach is his openness to learning. He reads constantly, books, newspapers, reports, and constantly seeks to expand his knowledge. This habit of lifelong learning has been integral to his success, and it's something he encourages everyone to adopt. Whether you're an aspiring investor or someone simply trying to improve in life, the message is clear. Never stop learning, stay patient, and embrace failure as an opportunity for growth. The best lessons often come when you least expect them, and they can shape the way you approach both business and life. Now that you've learned the secrets behind Warren Buffett's investment strategies, it's time to reflect on your own approach. Are you ready to take advantage of the next economic crisis, or will you allow fear to drive your decisions? Buffett's success lies not in avoiding challenges, but in facing them head-on with patience, resilience, and the ability to see opportunity where others see only disaster. Think about how you can apply these lessons in your own life. Are you focusing on long-term investments or chasing quick wins? Are you taking the time to learn and grow from your experiences? The next time the market dips, remember it's not a setback. It's your chance to step up and grab the opportunities that others overlook. If you found this video helpful, don't forget to subscribe to the channel and hit the notification bell so you can stay updated with more valuable tips from the world of investing. Your path to wealth and financial freedom starts now. Don't miss out on the next opportunity.